Check, check, check. Recording. Time ticking. Mic working. Alright. Yo, wait a minute. At everyone, pull up in their voice. Pull up. I'm in the voice. What am I doing? If you aren't busy, yes. So let's put this over here. See if we get anybody to pop in, so I can see when they pop in. But oh, they popping in. What's happening? What's happening, y'all? Hey, I just wanted to share some thoughts today. What's up to everybody that's popping in? What I want to share is that this week thus far has been challenging, to say the least. It's been challenging, to say the least. I didn't have an opportunity to trade today. Price didn't come to where I wanted to, and the reason why I popped up to do the live is because I wanted to just share. Sometime when I first started trading, y'all hold on, let me turn. I gotta turn my fancy dancy on. Y'all know I need my fancy dancy to be on, but my and if y'all want to do a little fancy dancy too, it's a thing called cursor highlight. I can't remember where I got it from, but it's cursor highlight, and you download this and you get like this auto hotkey thing, and it like you can set the key for like what you want it to be for your fancy dancy. I'm trying to remember where I got it from. Anyway, that's not even why. And then it be this little thing like this right here, and you can set it for highlight, left click, how big you want it to be. All right, and set like hotkeys. Like I got mine set to like the Windows key plus F1 to turn it on, Windows key and F2 to turn it off. You know what I'm saying? Stuff like that. And then I think you can do a picture too. Let me see. I don't know. Oh, I got a whole. I don't know. There it is. See, like that right there. There it is. Yeah. So that being said, nah, I can't. Nah, I done messed up. F5. Yeah, turn it off. There you go. Now back to my. God dog it. What is it doing? Get out of here. I done messed up. Showing y'all stuff. I done messed up my thing, man. I ain't never even played with them pictures. Now it's stuck in focus mode. It's stuck in highlight mode on my other screen. Focus, color. Oh, that's why. There it is. I'm sorry. How did it get switched? All right. Okay, get out of here. Anyway, this is what I popped on to say, man. When I first started learning how to trade, man, like I'll be seeing stuff, and then it'll be like, man, it'll be like difficult to read, or we would be in like high resistance trading conditions, and I would start to second guess everything I ever thought about trading, and I would second guess the concepts. I would second guess myself. I would be like, am I seeing it right? Am I tripping? And then if price didn't give me my entry model and it went where I presumed it was going to go anyway, then I would think I did something wrong, and I would, you know what I'm saying, I would second guess myself again. Anyway, long story long, this has been a difficult trading environment for this week, right? I can give my thoughts on it as far as, oh, we at all time highs, I just suck it up to, hey, we've been seeing divergence. We know we've been seeing divergence. We have been talking about the divergence. We have been seeing, and you can see the charts over here on my divergence screen over there. You can see we still having divergence. You know what I'm saying? Look at the YM over there. You know, the YM, you know, not getting back. Come here, line. You know what I'm saying? If I can get up there, the YM there, the NQ there, the ES, y'all get the picture, right? Even though, you know, divergence, right? We still having divergence, right? And whenever you have divergence, well, you know, we have some, we can get chopped. We can get chopped. It won't be a low resistance liquidity run, right? Now, so I'm not going to sit here and be like, oh, we had all time highs, blah, blah, blah. Yeah. Now, looking at what's been going on, right? As you can see, I have this old daily high marked out on the NQ. I got the old daily high marked out on the ES. As y'all see, the high that we have been saying, hey, that's the, you know, we can possibly try to make a run for that on the ES on the monthly level. You know, that's still up there. The NQ, we don't have nothing above to look for, right? So when we start getting the bearish divergence, right, what's the first thing we always say? Look above price for where it can go to soak up liquidity. Does it have to get there? We don't have to get there, but we always look above price to where it go so it can soak up liquidity, right? That was my point of showing that, because on the ES we got two things above that it can go to. On the NQ we had one thing above that it could go to, right? Why am I looking above? Because we're having bearish divergence, right? So I'm looking above for where we can go soak up the liquidity. Okay, that being said, now let's look at the daily chart for a second, right? Because I got up this morning and during the London, and I was trying to trade, didn't get an opportunity to trade the London, right? So I'm going to highlight Friday's range, right? I'm going to highlight Friday's range. Okay. And then I'll just go to I'll go to the start of the day for right now, right? We're going to make that, I'm going to take everything else off the screens just not to confuse anything. So I'll just leave it red. Okay, I'm highlighting Friday's range. I noticed this morning because I'm like, man, this price ain't giving me what I want. And so now let's go down to some 60-minute candles. Let me go back to the daily so to remember everything, all intervals. Okay, let's go down to 60-minute candles, and then we're gonna move over to I'll just put it to, matter of fact, I can move all the way over. I can move all the way to 9 o'clock, but I'm just gonna move it over to where I was. So I'll just go to I'll go up to 5, because I got up at like 3:30 and I went back to bed at like 5 minutes to 5, right? So I'll put it over to the 5 o'clock candle. All right, so then we're gonna move this over to the start of the week. Okay, there you go. That's the start of the week. Right now, remember, I highlighted the entirety of Friday, right? I highlighted Friday's range. Okay, that's this right here. For those who don't know, this little area right there, that's Friday's range. I'm gonna make that black, and I'm gonna make it a big line, right? That's Friday's range. When you so you want to try to train your eye to remember the higher time frame when you're looking at price. I'm gonna get to what I'm talking about in a minute. Y'all know how I do. I always turn everything into a teachable moment. You want to train your eye to look at price with the sense of what's the higher time frame. So on the daily time frame, we're looking at the range of this candle right here, right? And that's what I highlight. I highlighted there, but this is just encompassing from the Monday candle, which starts at 6 p.m. on Sunday up until 5 a.m. today, right? That's what we're looking at, because I was up looking at price today during the London. Okay, so looking at it on an hourly chart, that's what it looks like. And now you can see we are inside this dealing range right here. Discord, y'all move on this screen. Okay, we are inside this dealing range right here. Okay, so looking at what price has done, right? Looking at what price has done, we're inside this leg right here. Okay, now price has set up right here. As you see, we consolidated and dropped and came back up, completing a market maker buy model, right? This leg right here completed a market maker buy model right there, right? Then if you look back further, right, this leg right here took out that liquidity. That's the liquidity that I had marked when I was like an old daily high. Okay, that's hindsight. But we're here. I had that marked because that's where I wanted to go. That's what I was trying to get there. That was my target. Let's put, that was Picasso. Let's put Picasso up there. Come here, Picasso. Boy, I ain't seen you in forever. That was Picasso. That's where Picasso resides, right? Okay, so Picasso is here. That's Picasso house, right? So we're gonna put the line back there. Okay. So now if I turn this stuff back on right there, see how the old daily high pops back up on the line, because that's the same high, right? That's the same high. All right, if I hide that line now and I turn my TDA back on, see, that's the same line. Okay, now your bearings are together with me. Okay, now so we are inside this price leg right here, right? Now let's go in and examine what are going on. So I'm looking for an opportunity to come up here and knock on Picasso's front door, right? So whenever you get in a situation like this, where you have relative equal lows below you and you have relative equal lows above you, right? Somebody mute. I don't know who that is. I keep hearing feedback. And then we're gonna go to, what's the day? Today is Wednesday. Is today Wednesday? Yes, today's Wednesday. So we're gonna go to Tuesday at 6 p.m. This is right here. This is today's trading. And as you see, Monday and Tuesday, what did we do on Monday and Tuesday? We are inside Friday's dealing range. We're just trading inside Friday's candle. All right. So if you've been feeling stressed out as a day trader, If you've been feeling like, hey man, price is just chopping back and forth, you are correct. Because that's all we have been doing. You are not seeing it wrong. You are not, the concepts aren't failing you. Whenever y'all know what I always say, if you're going to trade inside high resistance, liquidity run scenarios, you have to be Jack B nimble, Jack B quick, right? So if you're looking for getting short and going to that low, or getting long, going to that high, you've been getting very disappointed, right? So back to where we was at right here. This started today's trading last night, right? So now we're going to get another line here and make it green. And this right here is the start of the London, right? That's the London Open. Okay. And this is when I went to bed right here. It was like I got up at 3:30 and I went to bed at like 10 minutes to 5. I said, you know what? Forget it. Okay, so why did I say forget it? Because I'm trying to get up here. This is my target. Hey, Picasso, come over here. Come over here, Picasso, so we can see you in the here and now. Here and now. That was the song for my graduation year. That was our theme song for our prom. I said graduation for prom. Do they still do that? Back in the day when I was in high school, you had themes, like your proms had themes, and our theme was Here and Now. And the song of it was Luther Vandross, Here and Now. Here and Now for the class of 1990. That's how they used to say it. They used to all be like class of 1990. I don't know why that was a thing. And every time they did it, the females did somewhere they put their pinky up in the air. Y'all can't see me, but they was like 90, and they put their pinky up in the air. The dudes didn't put their pinkies up. But anyway, back on track, Tim. Whenever you find yourself in between relative equal lows, right, and relative equal highs, that is a dangerous time to jump the gun. You don't want to jump the gun when you're in between relative equal highs and relative equal lows, right? Meaning if price ain't just blatantly obvious of what it's trying to do right now, it's best just to chill and wait. And chill and waiting sometimes means you may miss it, right? But I'm trying to get up here, and the price action during the time I'm watching, right, it's not giving me that. So I don't have anything to try to trade off of. So in this time right here, you know, I'm cool. I'm still okay. It's been 2 days. You know, what's going on? Why, you know, am I wrong? And all these things creep into your mind when you're watching price. We can't force the market to do anything. We can't force it to do anything. So we just have to wait for the algorithm to tip its hand, right? And then I don't know if you know they like trying to shake some people out of positions or what, but they just been holding price in this consolidation right here, right? Now, but using the tools that you've learned, right? This is not a bad thing, right? Because we know most of the, well, I ain't gonna say, the market maker models are the bread and butter to all price action. If you understand the market maker models, then you can you can use that tool to help you make your trading decisions. And you know the market maker models starts at the initial consolidation, right? So consolidation is not a bad thing, right? So we see this consolidation, cool. This can be an initial consolidation, right? Now we're blasting above the initial consolidation. Okay, fine. That, you know, it's a move. We missed it. We didn't get, I ain't gonna say missed it. We didn't get an opportunity to trade toward that. But, you know, how does price move? Price moves in consolidation, expansion, retracement, delivery, or consolidation, expansion, reversal, retracement, delivery. That's how price moves, right? So we got consolidation, right? We got expansion. Now we can either get retracement and a delivery, or we can get, now on the NQ, we don't have anything to look above. So I'll do the same thing on the ES in a minute, but I'm getting off of what I was saying over here, but I'm gonna get back to it because my mind has just taken me here. Or we can get consolidation, expansion, reversal, retracement, and then deliver. Get off my thing. Come on, get out of here. Cheese and rice. Let's try this again, man. Reversal, retracement, then delivery. All right. Let's make him blue so we'll know it's a different thing. Azul, make him azul. Right. And we know that that's how price moves. Now on the ES, right here, what would that lead to? Consolidation, expansion, retracement, deliver. All right, that one was red on the other one, so we'll make it red. And then over here, reversal, retracement, and delivery. God dog it. Get off of my, I don't know what this thing be. And that was Azul. Right? That we know that that's how price moves. And if we look here, we got consolidation here. Okay. And then if you look down here, you got consolidation there. So this consolidation could very well be the initial consolidation of a market maker sell model. We're gonna make that black. You know what I'm saying? Now I said the market maker models are the bread and butter of understanding price. So having this in mind, you can not get frustrated. Well, I ain't gonna say not, because you're gonna get frustrated, because I get frustrated. Okay, so let's do the same thing over here that we did over there. So it's on the screen that we're looking at. Right. So that way you cannot get so frustrated when price doesn't come back for you, or it doesn't give you what you want immediately. In the case of Monday and Tuesday, we're just chopping. Now we've set relative equal lows, relative equal highs. Now I'm back where I was. And you're in between the two. Y'all remember what we called it when we in between conflicting PD arrays. Relative equal highs and relative equal lows, those are conflicting PD arrays. Just like a bullish fair value gap and a bearish fair value gap. Do y'all remember somebody? Anybody? I don't care who. Let me see. Who am I? I'm not gonna call you Deborah. You always talking. Laverne. Laverne. What do we call it when we're in between conflicting PD arrays? And you got to get to me in full melodious voice. You can't just say it. You got to give it to me. Come on, Laverne. Come on, Laverne. You're gonna say what?
I said, let me say it.
Okay, give me your full melodious voice with it, Deborah. Come on.
Tell of two cities.
Huh?
Tell of two cities, right?
Your mic too loud. I can't hear what you're saying.
I said tell of two cities.
Tell of two cities, but you got to give me you got to sing. No, sing it. Sing. Where are we? Where are we? It's the tale of two cities, but where are we?
In the middle of the road?
You got to sing it.
Oh, my God.
You got to sing it.
No.
You got to say.
We're in the middle of the road.
There you go. There you go. And you ain't singing. You supposed to say, in the middle of the road. That's how you supposed to say it. And we in between the tale of two cities. That's correct. But you got to give me the melodious voice, right? Okay. And Deborah wouldn't sing it for me either. Least Laverne tried to sing it. Now, we're in between it's the tale of two cities, right? Bullish and bearish. We're in the middle of the road. Literally. Look, I'm looking at this now. We're literally in the middle of the road. We're pretty much halfway in between both of those. Look at that. We're literally in the middle of the road. I'm just seeing that now. I didn't notice that this morning, but we are right at fair value. We're right at equilibrium, right? Whenever we're at equilibrium, price tends to do what? What does price do at equilibrium? Price tends to consolidate at equilibrium. Why is price consolidating at equilibrium? Because it's accumulating the positions. It's making its decision. It has not shown you what it wants to do, but it's making its decision, right? So when you find yourself there using the tools, right? Using the tools that you've learned, this can help alleviate some of the stress. That's my whole point of saying this, is because I've been stressed out because I'm not getting into my trades that I want. I'm not, it's not giving me what I want. And then I sat here this morning and didn't get picked up and watched price go to where I want it to go. And that's when I was like, I need to talk to the gang about this, because I know I'm not the only one. Okay, so looking at what price did during the let's go down to 5-minute candles, right? Just so we can see some more price action, right? So we can see more price action. Now, looking at this, yes.
Can you repeat that? My headphone messed up when I was trying to talk. Please.
Y'all know, I speak extemporaneously. I don't know what. I don't know what.
And it was.
I'm recording it.
Okay, good.
I'm recording it. I don't know. I'm recording it. I don't know what I said. Okay. All right. So, all right, looking at this, right? Since we having so much good class participation, these are 5-minute candles, right? These are, let me see, this is 15-minute. Like, we'll look at the 15-minute. Remember, in between this green line and that, let me make this green line fatter, so we can see the time frame in which I was watching the price. All right, so. All right. So No, this is the line right here. Go back. You can stay there. That's the start of the day. There is when I left. And here is when I came in. I move it over once. Yeah, okay. That's when I came in. Okay. So these are 15-minute candles here, right? And we can do it on this one here. We don't have to go down to the 5-minute. Now, we're in between the tail of two cities, right? Relative equal lows, relative equal highs, right? We're in the middle of the road in between these, literally in the middle of the road in between both of these. Looking at price, can anybody tell me what would make, ignore all of this over here, all right? Can anybody tell me what will make you second guess? I guess I'll say, what will make you second guess going up here based off what price has done? We're here, we're inside this box here. All these candles haven't printed yet, right? But we're inside this box right here, and we're looking back at price. What inside price here will make you second guess if Picasso really resides up here? Anybody? Anybody got any thoughts about that? Looking at it right here, just we're having such great class participation. Let's just make it a full participation day. Look at, you're here. We're inside this little area over here in between these vertical lines. Looking back over here, right? What would make you second guess if Picasso really resides up here? No takers? No takers? Where's Rhonda when you need her? Where's Rhonda when you need her? Nobody's gonna speak up. Tisk, tisk. Tisk, tisk. Nothing's in the chat either. Tisk, tisk. Okay, so looking at price here, where we are now. If you notice here, we've come up above the buy side over here. We poked above the buy side. Put on my line so you can see it. We poked above the buy side there. Pulled back down, and then we got a further push above the buy side here. Mind you, now I put this here after we made this high right here, relative equal highs, right? That's when that comes into play. Okay, let's keep moving back. Let's look at price like this. So all right, let's see if we can walk it through and give you a better view of what I'm speaking of. That's gonna drive me crazy. Let me put that on that low right there. Don't ask me why that drives me crazy. It just does. Okay, so we went above the buy side there, right? Got a bigger push above the buy side there, right here, over here. Remember, we're getting the bearish divergence, so we're just looking up where we can go, you know, to see it, right? So we're getting close there, but we push up there, and then we come and we, all right, come down here. So we took out the buy side. Okay, took out the buy side. Now what is that right there where I drew that line? Right here. Right here. What happened right here? Somebody tell me. Don't be shy. What happened right there where I drew that line there? Anybody.
A change in the state of delivery.
Breaking market structure. Right. The change in state of delivery would be on the candle itself, but you know, we're keeping it simple. Breaking market structure. Yeah, it's true. A change in state of delivery happened in that area, but we're just keeping it simple. Breaking market structure right there, right? So breaking market structure there, a bearish breaking market structure. Right? We got a bearish breaking market structure right there. Okay. Right? So we got a bearish breaking market structure right there. Let's keep moving forward. We ain't gonna like go through everything. Right? Now, coming back to 3 a.m. right there. Okay, so we got a bearish breaking market structure right here. And then now at this time, price has come down and made relative equal lows, and it has made relative equal highs from Picasso house and Picasso's neighbor. All right, so we have a bearish breaking market structure here. Right, we push back up. Right, push back up right there, failed to take out that high. Right, if you notice, this high is lower than the high, failed to take out the high. Right, and then we drop down. So now we've had a bearish breaking market structure. We've had a failure swing here, and then we had heavy displacement down. Right, heavy displacement down. Okay, we trade back up into the imbalance, come back down, fail to take out the low. Right, chop around, consolidate, and then we push back up where? Into the imbalance that was created coming off of the failure swing. Right, coming off of the failure swing. We got this SIBI. Okay, we got this SIBI right here. So you got a bearish breaking market structure, a failure swing right here, because if you notice, we got this bullish breaker right there. We push back up and we just blast through it. Right, got a bullish breaker right here, high, low, higher, high, blast through it, disrespected the breaker, this heavy displacement down, fair value gap there. Right, we come back over here, push back up into the fair value gap, body respected there on that candle, push outside of a little bit, come back down to the low of it. Right, consolidate in there, and then what do? We leave it. Right, so now we got a balanced price range right here, and we're below it. Right, so now you're anticipating this to act as resistance. Right, we got a bearish breaking market structure. We have not taken out the low. Right, got a bearish breaking market structure, have not taken out the low, traded back into the imbalance here. Right, we still have an imbalance up there, but with this heavy displacement, now we're looking at this as a breakaway gap. Why? Because we came back to this imbalance and we traded back below it, and we left it, and now we're trading below it. Right, I mean, we traded through it, back to the low of it, and then we left it. Right, consolidated and then left it. So now we have a bearish order block right there. Right, and this is for when I think that was Kim was talking about changing state of delivery. Changing state of delivery is here. Right, if you look there, this would be on the, we got the opening price of that candle right there. Right, Right here, we chopping, going up. The price was going up there, right? And then we dumped, right? That expansion right there with the displacement, that's showing you, you know, changing the state of delivery right there, right? That's changing state of delivery right there. You got one over here, there, up here, right? This one is a big one. It's exaggerated. You can see it good, right? We're coming up, pushing way up, right? And then we get up here and then we dump, right? So there you go right there. You have the last up close candle would be an order block, and then you also, this is like a continuous up close candles. So let me borrow you for a second, right? With continuous up close candles, right there, this candle right here, not only did that candle create a change in state of delivery on that order block right there, this candle right here gave you a closure below that candle there, right? A lot of people look at the change in state of delivery for once you get that closure. So there you go right there. You got a change in state of delivery there off of this order block right there, right? And what makes it an order block, we came up to an anticipatory reactionary point, right? Price displaced below it. Boom, there's your order block. Okay. Now that's changing state of delivery. Okay, so we have a change in state of delivery where everything is bearish, right? But we are still in the middle of the road. We still in the middle of the road. So you need price to undisputedly, unequivocally give you a reason to get into anything. And although I want to come up here to Picasso's house, looking at this 15-minute time frame, right? Based off the way I trade, I have nothing to enter long, right? This is when I'm looking at price right here. This is when I'm looking at price. I want to go to Picasso's house up here, but we have a bearish break in market structure, right? We have a bearish change in state of delivery. We're trading below a bearish fair value gap, and we have relative equal lows below us, right? And then when I come here into 3 o'clock, right? When I come into 3 o'clock, let's put some more seasoning salt on here. Okay, when I come into 3 o'clock, 6 p.m. Okay, when I come in here at 3 o'clock, I done knocked down my doggone machine gun. Yeah, sorry about that, y'all. All right. Okay. Now, when I come in here at 3 o'clock, right, we have just attacked the Asian low. We have attacked a prior session low. Okay. So now this right here, as of this point, is the only thing lending into my favor as the way that I trade. Because for those who don't know, the way I trade is if my draw is to the upside, right, my preferred method of entering is getting an attack on opposing liquidity, displacement toward my draw, and then a retrace back to an imbalance. That's my preferred method of trading. Okay. We're bearish over here. All this price action up to this point is bearish. Right? All this price action to this point is bearish. So coming into this here, we are miles away from the high, and the Asian session has just repriced an imbalance. After midnight, right? After midnight, the market displaces to the downside. The market is choosing to take out sell side. All right. Coming into the London. So since it's bearish, since the price action is bearish, I don't want to fight against that without something concrete to the bullish side. I have nothing concrete yet. Everything is still bearish. I got a bearish fair value gap here, right? After displacing away. Bearish fair value gap there. Touch the fair value gap, come back down on the lower time frame. I'm starting to make relative equal lows, right? Relative equal lows here. Relative equal highs there. You're in between the tale of two cities. You are still in the middle of the road. Still in the middle of the road on the lower time frame. Okay. Let's push forward, right? So now we come up. We push up here. Still nothing. Why? Why is it still nothing? Because we've come down, take out the short-term sell side, and now we've pushed back up, took out the short-term buy side. But what did we push up to? We just pushed up to an order block right there. See this green candle right there? That's a bearish order block, right? We pushed up to the order block and reject off of it, right? I have nothing to say, hey, we are going to Picasso's house. Nothing about this price is saying we going to Picasso's house right now in real time. And that's my bias. So I just have nothing. I'm just sitting here watching price chop, right? And that would be this candle right here is when I went to bed, because I went to bed at like 10 minutes to 5. That candle there is when I went to bed, right? So as you see, before I went to sleep, nothing to give me any reason to try to enter to go to my bias, right? Was I wrong? Yo, we can use hindsight to say, oh, Tim, but you was right. But at this time, right here when I went to bed, right, was I wrong? Man, am I tripping? Is the draw not up there? But man, this stuff don't work, man. Man, how can Michael make this stuff work? It ain't working for me, man. I'm looking at the price action. Why it ain't doing what it's supposed to do? These are all the things that go through your head. Because looking at price right here, am I tripping? All right. All right, let's go over here. Let's get over here to what time did I start this? It says I started this at, how long it's been recording? For 40, man, I've been on here for 49 minutes. So let's just go to 10:30. 10:30 will be a good time, because I just said 49 minutes and it's 11:28. So we'll just go like an hour ago. Well, no, this one here need to come over. That need to come over. Oh, no, that's right. An hour ago. So we're going to put it at 10:30. And we're going to put this here at 9:30. All right. So let's get over there. Okay. Okay. So here we go. Now, coming into this right here, coming into it, price has just been coming up, right? Price has just been coming up, and we have just poked above the relative equal high coming in at 930, right? Just poked above the relative equal high coming in at 930. Move this over so we can see the candles better. Okay, so what am I working with here? Right, we have just came and knocked on Picasso's door, right? With that candle right there at 9:15, we knocked on Picasso's door. That's not a run through buy side liquidity. We just knocked on his door like it's Picasso. Miss O, can Picasso come out and play? We just knocked on the door, right? Okay, so using the tools, right? Using the tools that we've been taught. Now we're above this right here. So now we want this to act as support. We're above it, right? We have an old high, prior session high. We're above it. Okay. We have a bullish fair value gap here. Okay. We got, make these green. Got a bullish fair value gap there. We got a bullish fair value gap here. And we got a bullish fair value gap here. All right. 3 imbalances. Okay. We got 3. Let's back it up right here. Back it up. Right there when we first knocked on Picasso's door. That's the 9:15 candle. That's the 9:15 candle. But the 9:30 candle is going to go through all of that. Okay, so this is what price has done leading into 9:30, right? So looking at our current dealing range, right? We came up here and knocked on Picasso's door. Okay, came up here and knocked on Picasso's door. So now our current dealing range says that equilibrium is right at this first imbalance right there on the 15-minute. All right. If we go to the 60-minute, gotta get this out of the way. Right. We go to the 60-minute, equilibrium on the 60-minute is right at the first imbalance. And then we, on the 60-minute, we have another imbalance. So we got an imbalance that's in the discount and an imbalance that's right at equilibrium on the 60-minute. On the 15-minute, we have 2 imbalances that's in the discount and 1 imbalance that's right at equilibrium. Okay? So whenever you have multiple imbalances, if you enter on the top one, you have to allow for price to go all the way down, right? So watching price here, Picasso is up here. So where do we want to buy? We want to buy in discount, sell in premium. Equilibrium is here. Price comes down, right? Comes down and kisses institutional order flow entry drill on the 15-minute and the 60-minute. Well, you can't see it because that's a 60-minute candle, but remember that 60-minute was in the same place, right? Right there. 60-minute was in the same place right here. This is the imbalance right there. 60-minute had an imbalance in the same place. Okay, and as you see on this 60-minute candle, see how we poked right there, in the area right there. Right, same area. Right, same. And let me go back, and just not to confuse anybody. I don't want to confuse anybody because I know somebody gonna be like, "But Tim," you know what I'm saying? So, see, we're over here, just like that, right there, so that you can see the candles right there. So, boom, poke right there, and then took off. Right, poke right there and took off. Okay, so the way we want to buy is in the discount. Right, price never made it to equilibrium, so it's still in the premium. Price is still in the premium. Never made it to equilibrium. Right, if you wanted to buy off this fair value gap at the top, cool beans, you got picked up. But for the way I trade, I want to be in the discount, so I would need price to come back down into the discount. Right, it did not do that, so I did not get an opportunity to trade. And what did price do? Price blew the freaking roof off of Picasso's house. Right, blew the roof off of Picasso's house. Did not get an opportunity to trade it. Had to watch price go exactly where I anticipated it to go, but during the London, I was not afforded anything that remotely looked like we're going to go. Over the grand scheme of things, we can see that it played out perfectly to the way I like. We had an attack on opposing liquidity from a prior session. We attacked the Asian, right? We had displacement toward the draw. We retraced back into an imbalance and went up. But since we're in a high resistance environment, see all the, excess that I would have to account for. Plus, we did not come back into the discount. Right? We did not come back into the discount. And then, yeah, we can look in hindsight over here and be like, hey, Tim, there's your shit up there. You attacked opposing liquidity. You displaced toward it. You traded back into an imbalance right there. Yeah, that's all fine and dandy in hindsight, now that you know price did this. But remember what it looked like when we were back here? All right, remember what it looked like when we was back here, trading back here? All of that was still showing bearish. We were still respecting all of the premium PD arrays. So if you don't get nothing else out of this, just remember, when you see your favorite guru on the internet talk about how clear it is that price did this, price did that, remember, it don't feel like that when you're walking through price in real time. You really have to dig deep into your intestinal fortitude to remember the concepts that you've been taught. You got to dig deep and look for that discipline not to chase. You got to dig deep when it feel like, man, why this ain't working for me? How it just not work. I think I see it, but it ain't doing what I think. You just have to dig deep and realize when you're in a market with correlated assets like the three sisters, the Dow, the ES, and the NASDAQ, and they're not correlated. It's supposed to be a symmetrical market, and it's trading asymmetrical. You got to realize price is going to chop. Prices, the algorithm is not going to be moving, like to the, it ain't going to be as accurate. It's going to be sloppy sometime. It's going to overshoot sometime, and sometime it's just going to, not set up during the time you're watching, or it's just not going to come back to your price. Just not going to come back to your price. And then just like now, here we are on the NQ. We are super extended, right? We're super extended, and now we have an imbalance to the upside, right? In a case like this right here, what I would be looking for with this to see if we will continue higher, because this is showing, hey, I want to continue higher. What I would be looking at for this right here, I would look over to the ES and be like, hey, have we hit this high yet? If we haven't hit that high yet, then it could be possible. But since we're extended, I wouldn't just jump in as soon as we got there, right? I would wait until we came there and looked like it wanted to reject, and then I would go down to like a 1 minute or a 5 minute and see if I have some kind of sign on the 1 minute or 5 minute that says, yes, I want to go back up. All right. So what that looks like in price, right? And there's your imbalance right there. All right. Once we come into that imbalance and we act like we want to reject, then on the 1 minute, right? See what we did, right? There's a 1 minute imbalance right there. So we came back into this 1 minute imbalance and repriced the whole thing, right? Got all the way back over here to this bullish breaker right there. Once we got there, then I would be looking for like a shift in sentiment or a break in market structure on the 1 minute to go back up. Let's just pretend like this area right here we've gone into that fair value gap. Right now, I'll be looking at price and be like, hey, we went into the fair value gap, and now once we come back up, if we invert this SIBI right here, right, that'll be my first sign. You could go off of that if you trade inversions. And then if we get a break in market structure right there, there's your break in market structure. If there's an imbalance over here, you can look to trade back to that. Or once you get your break in market structure, you can trade off of the changing the state of delivery of the bearish order block. You could trade off the bullish breaker right here, the closing price of the bullish breaker. You can pick whatever you want, you know what I'm saying, however you want to trade it. But that's what I would do. I wouldn't just jump in when it came back to that higher time frame, because we're so extended. So, you know, whenever you take out highs or lows, there's a possibility of a reversal. You know, so just like how we watching this right here, I'll be watching to see, will we invert this, right? If we invert that, this candle closes above that high, I'll be watching it just like this. Do we invert that? Okay, boom, we invert it. Okay, if we invert it, we invert it, right? Then I'll be watching, okay, boom, we got a break in market structure right there. Now that we got that break in market structure, that's more confirmation. You know what I'm saying? Do we have an imbalance? And boom, we inverted that right there. Just like I was saying, now that's inverted. Okay. Now we just inverted that. And then now you could, if you trade inversions, you can trade inversion right back up to that high or further. And then you say, okay, do we, I want to wait for the break in market structure. Okay. Wait for the break in market structure. If you get a break in market structure there, then you look to see, do we have an imbalance over here we can trade to. But that's how I would just watch price to see if that what was that 15-minute was looking at, this displacement is going to continue up. I'm not just going to buy it as soon as we come back to it. How right there, how we just came back, we came right back to it, tick for tick right there, right? Because we're so extended, and we're, you know what I'm saying, we're up in a very, very expensive, we're in premium right now. It's very expensive up here. And for that price leg right there, right, we're still in the premium. We have not come back into the discount of that price leg right there. I yield my time. Do anybody have anything for me? This was pretty good, man. Y'all think I should I should put this on the public channel. I think it's a lot of people out there that probably can benefit from this. What y'all think? I ain't gonna put y'all on the spot. I'm gonna stop the recording. Did it
I think
stop?
it was great, Tim.
I stopped the recording. Okay. No, I didn't.